Hey everyone, and welcome back to the AI Tech channel. Today, we're diving deep into the roller coaster that is Tesla stock. Is it a rocket ship to a $1 trillion valuation, or a high-speed crash waiting to happen? Buckle up, because this is going to be a wild ride. We got some juicy news from Wedbush analyst Ives, and it's a mixed bag of sunshine and potential thunderstorms. He maintains an outperform rating on Tesla with a $550 price target. That's the good news. The potentially bad news? Well, let's just say a trade war with China could throw a wrench into Tesla's grand plans. So what's really going on here? Is Tesla destined for greatness, or are geopolitical headwinds going to clip its wings? Let's break it down piece by piece. Okay, first, let's talk about why Ives is so bullish on Tesla. He's betting big on two key factors: autonomous driving and Elon Musk's potential influence with the Trump administration. Ives believes Musk's connections could lead to favorable federal policies for self-driving cars. He even suggests this could unlock a $1 trillion valuation for Tesla. That's a massive claim. Think about it. Fully autonomous driving isn't just about convenience. It's about revolutionizing transportation, logistics, and even urban planning. Tesla is positioning itself to be at the forefront of this revolution. Ives also points to Tesla's near-term innovations, like unsupervised self-driving tests, a low-cost model, and expansion in robotics, as reasons to remain optimistic. He sees Musk's ability to juggle multiple projects as a strength, not a weakness. It's like he's saying, don't worry about Doge. Tesla's tech development machine is still firing on all cylinders. But, of course, there's always a but. Here's where things get tricky. Ives warns of significant risks from a potential US-China trade war. Tesla's sales in China dropped 11.5% last month, while BYD, a local competitor, saw a whopping 47.5% increase. That's a stark contrast, and it highlights the potential geopolitical headwinds Tesla faces in this crucial market. China is the world's largest electric vehicle market, and Tesla needs to succeed there to achieve its ambitious growth targets. An escalated trade conflict could lead to retaliatory policies from Beijing, making it even harder for Tesla to compete. Imagine tariffs on Tesla vehicles, restrictions on battery imports, or even preferential treatment for domestic manufacturers. These are all real possibilities, and they could significantly impact Tesla's bottom line. It's a delicate balancing act for Tesla, navigating the complex political landscape while trying to maintain its competitive edge. We are talking about hundreds of billions of dollars in market cap at risk. This is not a small issue. Let's address the elephant in the room, Elon Musk. He's a visionary, a disruptor, and, let's be honest, sometimes a bit of a distraction. From Twitter, now X, to SpaceX to Neuralink, Musk has a lot on his plate. Some investors worry that he's spreading himself too thin and that his focus on other ventures could detract from Tesla's success. There's also the question of Musk's political views. His increasingly vocal opinions have alienated some customers, particularly in Europe, where Tesla's delivery numbers have reportedly declined in some countries. It's a complex situation. On the one hand, Musk's vision and drive have been instrumental in Tesla's success. On the other hand, his distractions and political stances could be hurting the company's brand and performance. The question is, can Tesla thrive even with Musk's divided attention? Can Tesla manage the brand risk that Elon Musk represents? This is the question on every investor's mind. Now, let's dig a little deeper into the technology that underpins Tesla's future. The key here is autonomous driving. Tesla's full self-driving FSD system is still under development, but it has the potential to revolutionize the automotive industry. Imagine a world where cars can drive themselves, freeing up commuters to work, relax, or even sleep during their daily commutes. This would not only improve safety and reduce traffic congestion, but also unlock new economic opportunities. Tesla is investing heavily in AI, computer vision, and sensor technology to make FSD a reality. But it's not just about the technology, it's also about the regulatory environment. Ives believes that favorable federal policies could accelerate the adoption of autonomous vehicles, giving Tesla a significant advantage. This is where Musk's potential influence with the Trump administration could come into play. But it's important to remember that autonomous driving is still a nascent technology, and there are many challenges to overcome, including safety concerns, ethical dilemmas, and public acceptance. We still need years of data and development to make FSD reliable enough to be widely adopted. Let's talk about the competition, specifically BYD. This Chinese automaker is rapidly gaining ground in the electric vehicle market, and its recent sales figures are impressive. BYD is not only selling more cars in China than Tesla, but also expanding its global presence. What's driving BYD's success? Several factors are at play, including lower prices, a strong focus on the Chinese market, and government support. BYD also has a technological advantage in battery technology, which is a crucial component of electric vehicles. The competition between Tesla and BYD is heating up, and it's likely to intensify in the years to come. This is good news for consumers, as it will drive innovation and lower prices. But it also poses a challenge for Tesla, as it needs to stay ahead of the curve to maintain its market leadership. The Chinese market is also incredibly fast-moving. The company has to continue to iterate to win. So what's the bottom line? Is Tesla stock a buy, a sell, or a hold? Well, it depends on your risk tolerance and investment horizon. If you're a long-term investor who believes in Tesla's vision and is willing to ride out the volatility, then it might be a good buy. But if you're risk-averse and concerned about geopolitical tensions and Musk's distractions, then you might want to consider a smaller position or even sell your shares. Ultimately, the decision is up to you. But one thing is clear. Tesla is a company with enormous potential, but it also faces significant challenges. The next few years will be crucial in determining whether Tesla can achieve its ambitious goals and deliver on its promise. This is a company that has the potential to change the world, but it's also a company that's facing a lot of uncertainty. It's a high-risk, high-reward investment, and investors need to be aware of both the upside and the downside. One thing we can be certain of is that it will be an exciting ride. That's all for today's analysis. What do you think about Tesla's future? Are you bullish on the stock, or are you concerned about the risks? Let me know in the comments below. And don't forget to like this video and subscribe to the AI Tech channel for more in-depth analysis of the latest trends in technology and finance. We'll be back soon with another exciting video, so stay tuned. And as always, thanks for watching.